Good evening, everyone. My name is Michael Levinson, and I am a senior consultant with Cirrus Consulting's healthcare leasing team. I want to start off by thanking you all for taking the time to join us this evening. We've got doctors attending from all across the country, from Hawaii to Alaska, Florida, all the way to Maine as well. The purpose for tonight's program is to discuss commercial real estate and why a dental office lease really is integral to your success. So I wanted to give you a bit of background about Cirrus and who we are. So we were founded by a group of dentists back in 1994 because they realized that they really needed the expertise to even the scales when it came to dental negotiations. Dentists have a lot of education when it comes to clinical dentistry, but when it comes to real estate, unfortunately, dental schools really do not do a great job at preparing you for what you need to tackle, for example, when it comes to lease agreements. At Cirrus, we analyze about more than 1,000 dental office leases annually, and we negotiate about half of them, so about 500 leases as well. Since our inception, we've negotiated over 10,000 dental-specific office lease agreements, and we host over 150 seminars annually across the country, specifically for dentists. They're very highly attended and well-regarded, and we cover a lot of the information that we will be covering in today's presentation. Obviously, due to some time constraints, today's presentation will be a bit more concise. But again, if you're interested in attending any of our in-person seminars in the future, you're welcome to visit our website to take a look at upcoming dates in your local area. And again, these seminars are fully CE accredited as well. So to give you a sense of some of the active files that we're currently working on, I had our marketing team put together this slide, and as you can tell, we really do operate throughout the country. We're the only player that understands real estate behavior in both large and small markets, and this is critically important because a landlord in Seattle really is drastically different from a landlord in New York or Maine or Florida or Texas. It really does depend. I mean, even within the locality, a landlord that's simply a mom and pop type small operation versus a institutional real estate investment trust, they're entirely different animals and thus have to be approached appropriately. The purpose of today's webinar, just to reiterate, is to talk about the importance of a dental office lease. Really, why should you be focusing time and effort on this one document? We'll be covering the key components that will help you grow and protect and ultimately sell your practice in the future. And we're going to be talking about an action plan and a strategy to discuss some tips for you to consider when approaching your dental office lease negotiation. So what is a lease? Now, you probably have a general idea as to what it is. Most people understand that it's a document that lays out the rent, who the rent is going to, and what date the rent is due. And this is all true. Now, there's one piece of paper that is more like a lease than you may have realized, and that's a check. And a lease agreement really is the most expensive check that you will ever write, more than your car, more than your office equipment, more than your home, really. And interestingly, I was presenting in Beverly Hills a couple months ago, and when I told a group of doctors what I just told you, one doctor stood up looking a little bit upset at what I just said, and he told me, there's no way that my office lease agreement for my practice is more expensive than my house. There's no way. So I asked the doctor how much money he pays in rent every month. And his face turning a little bit red, he says to me, well, my practice is prime real estate in Beverly Hills, but I pay $30,000 a month in rent, including common area maintenance expenses. And now clearly this is not a cheap lease agreement, so it's a bit of an extreme. So I tell him, let's assume your rent never increases. Now, let's also assume that your rent will, that you'll stay at this location for, let's say, 20 more years. So I started breaking down the math for him. So that would be $360,000 a year just in rent. That's $3.6 million every 10 years. And that's $7.2 million over the next 20 years. So I think at that point he sat down and he understood what I was saying. The numbers really do add up, and over the course of the lifespan of your tenancy, it can be more than even your house. And interestingly, for most other dentists who pay within a normal range for rent, these numbers still hold true. For example, if you're paying $3,000 per month in rent, fairly reasonable, that would be $36,000 a year, $360,000 every 10 years, and $720,000 every 20 years, and $1,080,000 for 30 years, which I think is fair for most dentists to practice for. And also keep in mind, this is assuming that your rent never increases. And in my years working in real estate, I've yet to see a lease agreement that doesn't increase over the span of 10, 20, or 30 years. So why is the office lease so important? Now, if all of you listening to this presentation tonight were accountants, I would say maybe it's not as important for a dentist, but because you are a dentist, there's a lot more gravity to the implication of the lease agreement. And unlike accountants, when they practice, they have office, they have chairs, they have desks, they have computers, notepads, things like that. Whereas for you, you have substantial investment. You've invested hundreds of thousands of dollars in the form of what's called leasehold improvements, which would be really anything that's attached to a ceiling, wall, or floor. So that's plumbing, electrical, dividing walls, and whether or not you built it out yourself or you purchased it from another doctor, it's irrelevant because the value is there. And that makes it very difficult for you to move. So if you can't really move on a whim like an accountant, say, like an accountant can over the span of a weekend. And if you did want to move, it's very time consuming. Now, again, if you did want to move, your practice would likely have to close for a period of time. The average practice takes between 4 and 6 months to build out. And during that time, if you're not practicing, your patients still need to get their oral hygiene done, and that can result in patient attrition and loss of business. And unlike most other tenants, other commercial tenants or retail tenants, most dental practices tend to sell. It's often part of a retirement strategy, and for that reason, we need to make sure that the lease agreement is accommodating of that transition. The benefits of a properly negotiated leases are really far-reaching. The long-term stability and security of your lease agreement really is paramount. What we do when we negotiate a lease agreement is we look to sign a long-term lease. So that would be typically a 10-year term plus multiple what are called options to extend. These are things that allow you to stay in the space without having to fully renegotiate the lease agreement. Typically, the only thing that gets renegotiated during an option is the rental rate, which should be clearly enumerated in the lease agreement previously. Now, when we agree to a long-term lease agreement, this gives us substantial leverage in a lease negotiation. The reason being is because landlords know that as a dentist, you are incredibly stable tenants. You're not picking up and moving like most other tenants, and this gives them rental stability and predictability for a long period of time. And oftentimes they won't tell you this, but when dentists commit to a long period of time in their building, they're very happy. I mean, a lot of them, they're doing cartwheels in their office because they basically secured rent for a long period of time. And oftentimes when we approach the negotiation, we'll look to sign a shorter, we'll approach them with a shorter term, say a 5-year, and then quote unquote concede to signing a longer term when really it's within our interest. Now, the flip side of that is it's in our benefit to sign a long-term lease agreement, firstly for stability, so we don't have to worry about being evicted or having the rent increased unreasonably. But if you are looking to sell your business within the next 10 or 15 years, we're going to need extra term on the lease. So what I mean by this is we're going to need options or exercisable term so that not so that you can use that to continue to practice, but so a prospective purchaser has the ability to use that term. This is very important because when your practice is going to get sold, or when someone is looking to buy a practice, they're in all likelihood going to have to get financing from a bank or a lending institution. The bank is going to ask for a copy of your lease agreement. And if the bank does not see sufficient term to amortize or to write off the cost of the loan, and typically they look for around 7 to 10 years, then that's a deal breaker. They just won't consent to the loan, because if there's only 1 or 2 or 3 or 4 years or so of term, there's no assurance to the bank that they're going to get paid back on their loan. So typically they just won't consent, and again, that can kill the deal. We also look to minimize the risk exposure and, the risk and exposure to your lease. And one of the things that we often see in dental leases, which we don't typically see in other commercial real estate leases, is that a lot of you sign your leases personally. And if you have your lease handy, then I recommend that you take a look at the item on the top of the very front of the lease agreement that lists the tenant. And if you see that your name is there personally, Dr. Smith or Dr. whatever your name is, then that's a really bad sign, because what you've done by signing the lease personally is you've provided what's called a personal guarantee or a personal covenant. And the implications of this are that if for any reason the landlord sought to recover damages from you, whether it's because you've defaulted on the lease, you've been late on paying rent, or you've broken any of the dozens or maybe 100 of provisions in the lease agreement, they could recover damages from your own personal assets, your house, your car, anything that you own. So we always look to have your corporation. So if you do have a corporation established, we would substitute your name for the corporation. And if you don't have a corporation established, I highly recommend that you do establish one, and ideally with minimal assets. So we don't want your dental equipment within that corporation. And by having your corporation listed on the lease agreement under the tenant, it limits the recovery of the landlord to the assets that are held within that corporation. And for those of you who do have your corporation listed as the tenant on the lease agreement, I would take a look to see if you have what's called a guarantor agreement or a personal guarantee elsewhere in the lease agreement. And if you do have that guarantor or the guarantee, then that actually undermines the legal protection that you've established by listing the corporation as the tenant, because you've essentially provided that guarantee regardless. So we need to have that cleared up as well. Thirdly, we need to make sure that your lease provides you with maximum flexibility. You should not be bogged down because of the terminology in the lease agreement. For example, we need to make sure that you have what's called an associates clause in your lease agreement. A lot of dentists don't realize that under the majority of lease agreements, you do have to get the landlord's written consent to be able to bring in an associate. And unfortunately, we deal with a lot of clients who are encountering issues with their landlord because they've brought in an associate without this written approval, and the landlord is threatening to terminate the lease or increase the rent or disallow the associate to practice there. And best practice is to include this language. We need to make sure that the permitted use provision, so this is the provision that dictates what you're allowed to do in the space, is broad enough and covers all of the different types of specialty dentistry, not just general dentistry, so that if you ever decide to bring in a specialist from time to time, or if you ever decide to learn a new type of dentistry, whether it's implants or any sort of orthodontic work such as Invisalign, that you're entitled to practice that type of dentistry without being in breach of the permitted use clause. And in terms of flexibility as well, we like to incorporate a clause in the lease agreement that's called a right of first refusal. And simply put, a right of first refusal gives you the ability to take over space in the building or in the plaza before the landlord places that space on the open market. So if your next door neighbor does not renew their lease agreement and the landlord wants to rent it out to someone else, they would be obligated to approach you first and ask you whether or not you're interested in taking over that space and expanding. Or if there's another space in the building, if you're interested in relocating. Now, there's no obligation on your part to expand or to relocate. It just gives you that added flexibility so that after the fact, you don't approach the landlord and say, hey, I was interested in that space, and they say, I wish I knew. So it just covers your bases in that regard. And we also want to make sure that there are fair and affordable financial terms. Now, this is something that a lot of you feel because you're paying rent every month, so it's something that you're fairly cognizant of. And many of you have probably heard of fair market rent. So fair market rent is kind of an ambiguous term. It sounds nice, but really what fair market rent means is that I, as a landlord, am going to get you to pay whatever I think I can get you to pay. And without relevant information, you're left in the dark as to what's fair and reasonable. What about common area maintenance fees for those of you paying taxes, maintenance, insurance, etc.? How do you know if what you're paying is fair and accurate? There's really no way for you to know it. I mean, oftentimes what landlords will do is they'll issue what's called a reconciliation statement. So it's an Excel spreadsheet where they'll put landscaping, $5,000, window washing, $2,000, but there's no way for you to know that these numbers are accurate and reflective of what the landlord is truly paying. So for this, what we include is what's called a right to audit. A right to audit gives you the ability to verify and validate that these additional fees are accurate and reflective of what the landlord's paying. So what I mean by that is when we have this right to audit, you or a third-party auditor will have the ability to take a look at the receipts of the landlord. They'll be able to take a look that if they're claiming to pay $5,000 for landscaping, that there's a receipt showing that, and you should have the ability to call these companies to make sure. And interestingly enough, when we incorporate a right to audit into our lease agreements, we often find a discrepancy between what you pay and what you do pay in the past and what you ought to pay. And that's not to say that the landlord is being dishonest. Sometimes it's just a matter of them not being diligent in their accounting process. And what I'll do is I'll put my email up at the end of this presentation. And if any of you at all feel as though you're overpaying in rent, certainly feel free to send me an email, and we'll be happy to take a look at what is reasonable in the area, and we can talk about whether or not it's fair. Lastly, a benefit of the lease agreement is it really does enhance your ability to sell the practice. I mean, with all of these items that I just covered, with a properly negotiated lease agreement, it's important that we can make your lease agreement act as an asset and not as a liability. Because oftentimes when we represent buyers, their lease agreement is a part of the appraisal, and the appraiser will oftentimes reduce or deduct some of the value because of the liabilities included in the lease agreement. So what makes up the value of your practice? And by the way, these are specific to general dentists. The breakdown is slightly different for specialists. Goodwill. So simply put, goodwill is your active patient charts. So what is your consistent revenue stream? There's also the equipment. So this would be the depreciated value of your equipment, as well as the leasehold improvements. Again, leasehold improvements are really anything that's attached to a ceiling, a wall, or a floor, such as the plumbing, the electrical, the non-movable cabinetry, the dividing walls. It wouldn't include what's called trade fixtures, so things like your chairs and your x-rays, things like that. But really anything that's attached to the building would be comprised within that equipment value. And once those two first items are established, the lease agreement has to be transferred from the seller to the buyer. And the lease agreement can determine up to 100% of the value, because if you can't transfer the lease agreement due to onerous language, then really what's the value of your practice? In fact, we're actually working with a doctor now whose practice is producing $2.2 million per year, and he's currently what's called a month-to-month tenant. It means he's run out of term on his lease, so he's currently only operating on month-to-month, so he's paying the landlord month-to-month, and at any point in time, the landlord can issue a 30-day termination notice. And the problem with this doctor is that, again, his practice is not valued at anything, because, and his chances at closing a deal really at this point in time are dead. We're working on negotiating a new lease agreement, but until then, I mean, you can put yourself in the position of a purchaser. The likelihood of you buying a $2.2 million practice without the assurance that you can remain in that space for years to come, it's an unreasonable liability that no one would be comfortable taking on. I want to talk to you now about what is in your lease agreement. So we'll go through a couple clauses, and I'll explain really line by line as to what the issues are and how they can affect you. So this is language that we pulled from one of the leases that we reviewed, and language very similar to this is often found in about roughly 90% of the leases that we come across. And this is what's called the option to renew. So the first item here says that provided that Dr. Joe Black shall remain as the tenant. So the issue with this language is that it says provided that Dr. Joe Black. So the option to renew, as we discussed, is the ability to exercise additional term. This is critical to the future tenant in the space. And the issue is that Dr. Joe Black, if he's no longer the tenant, then this option to renew is null and unexercisable. And again, this can kill the deal, because without that extra term, there's no way for that a prospective purchaser is going to commit to buying the practice. It goes on to say, if the tenant duly and has regularly paid its rent and has performed its covenants and obligations under this lease and has not been in default. This is an issue because if at any point in your lease agreement you have been late on paying rent, even by a day, then you have technically been in default. Whether or not you've been aware of it, and oftentimes a lot of our clients have heard from their landlord that they've been in default, and they weren't even made aware of this. I mean, the rent was sent, and whether it was the post office or whether the check got lost, the landlord says that they didn't receive it, and because there's no accountability, it's he said, she said, and oftentimes if it goes to court, unfortunately, courts tend to side with the landlords. So we need to make sure that this option to renew is not contingent on whether or not you've defaulted on the lease, because unfortunately mistakes happen, and that should not be a factor. It goes on to say that any such renewal shall be on the landlord's then current standard form lease. So what is the current standard form lease? It sounds nice. It sounds that the landlord will just provide the lease agreement, and it's standard. It's a standard form. It sounds fairly innocuous. The issue here is that the verbiage standard form lease is absolutely ambiguous. There's no telling what that means. So in other words, if we finish our initial term and we go to exercise the option to extend, the landlord can then place a document in front of us that says standard form lease, and it can be riddled with legal liabilities. And at that point, your choice is to either walk away from the space or to sign this current standard form lease. Whether or not you've previously negotiated your other lease, this is now what you're having put in front of you. So critically important that we get this revised as well. In no event shall it be referring to the rent, less than the rent paid in the last year of the original term. Now why is this the case? If you were a tenant in South Florida back in 2006 and you signed a 10-year term or a 5-year term, then you were paying an incredible premium on rent. The rent still, even call it 7 or 8 years after the recession, has not rebounded to the rental rates that they were back in 2006, 2007. So there's really no reason why your rent should not be revised to what's fair market comparable in the area. And again, this next phrase sounds nice, but it's really does need to be cleaned up. It says that the new rent is going to be based on the market rent for renewing tenants in the building. Now, if a vacancy is filled by a premium tenant, whether it's a Walmart or a Starbucks, and they're paying a premium on rent, this now becomes the market rent for renewing tenants in the building, whether or not it's reflective of your tenancy, and whether or not it's reflective of the desirability of the space. If you're on a third or fourth floor office building, or you're in an area, the strip plaza, with minimal visibility, you should not be obligated to pay the same rental rate as someone with prime retail. And for this reason, we need to make sure that the rental rate is based on fair market comparables. So dental practices within a given geography, so whether it's a half a mile radius or a mile radius, or whatever that the radius is agreed upon. And again, it has to be related to dental spaces, because it's got to be an apples to apples comparison. The assignment clause, and for those of you who are who plan on buying or selling a practice, this really is going to be the most important segment of the presentation, because this is the clause that's going to allow you to transition the lease agreement from yourself as a seller to the buyer, or if you're buying, from the seller to the buyer. And to share a recent case with you that we were just involved in, we were helping a 63-year-old dentist from San Francisco. And she'd been in her building for over 35 years with the same landlord. And her attorneys advised her, and her advisors let her know that it's a great time to sell her practice. So she formalized a conditional agreement of purchase and sale with a prospective purchaser. And the agreement had two conditions, which, by the way, we advise those of you who are looking to buy a practice include as well. And these conditions were that the rental rates were not to increase upon transfer, because obviously if you're valuating the value of a practice, it's based on the current rental rates, and if they fluctuate, then obviously that has an impact on how much you'd be willing to pay for the practice. And secondly, they needed to make sure that the lease agreement was to be successfully amended and transferred from one tenant to the other, that way making sure that the new tenant had the ability to practice in that space. So this doctor approached her landlord, asking him what were the necessary steps to get the transfer process started. And the landlord told her that it was not a problem at all, and that all she needed to do was to send him an email requesting that she was interested in transferring the lease and selling her practice. So she sends the email, and she gets a reply from the landlord asking her to come by his office to chat about the next steps. When she got to his office, she sat down, and the landlord placed 3 documents in front of her. The first document was a termination notice that was effective immediately upon signature. The second document was a 30% escalation in rent. And the third document afforded the landlord 50% of the sales proceeds from the sale of her business. So she called us, obviously fairly distraught, and explained her situation and got us involved. And after more than 100 hours of back and forth with this landlord and negotiating, the landlord would not budge. They wouldn't. And what we were able to do after all this time is we were able to negotiate the third option down from 50% to 25%. And with her practice appraised at $1.2 million, she ended up writing a check to the landlord for $300,000. Now, I want to show you this assignment clause, and we'll talk about how the landlord was able to do this. firstly, this provision says that the lease premises shall, the assignment shall first have received the consent of the landlord. So in other words, the landlord holds all the cards here. You cannot sell your business or transition the lease without the landlord giving their consent. And this really is the bottom line that has resulted in issues for our clients, because without the landlord's approval, you're stuck. You have to really concede to what they're demanding. Otherwise, you have no lease to transition and therefore cannot sell your business. So it is reasonable for the landlord to have some control, but in our lease agreements, there's typically around 2 to 3 pages of legal language that dictates why the landlord can disallow the sale of the practice and the transition of the lease agreement. Because in fairness, if you decide you don't want to practice anymore and the only person willing to take over the space is a Pizza Hut, the landlord's within the rights to not allow you to transition to a Pizza Hut. However, if you're looking to sell your business to a licensed dentist in your state, then there really is no reason for the landlord to have any issue with that whatsoever. I mean, if banks, I mean, some of the most critical institutions in that they credential people before issuing loans, if they're willing to grant a 100% finance loan to a young dentist, then the landlord should have absolutely no issue in allowing the transition to go through. Secondly, it says the option that the landlord shall have the option to either terminate the lease or to revise the minimum rent to be paid during the remainder of the term to the greater of the then current market rent for the lease premises, or 15% greater than the then current rent. Absolutely unreasonable. Firstly, the landlord should have no option to terminate the lease upon consent. That's really how you get yourself in a situation like this other client that we were assisting. Again, if the landlord agrees to the assignment, then everyone should be happy. The landlord has a new tenant in the space. Just absolutely unreasonable terminology that, again, is included in about 75% of the leases that we come across. When it comes to revision of the rental rate, again, this is something that can have a real impact on the sale of the business, because no one in the right state of mind is going to agree to purchase a business without knowing what the rental rate is going to be. The rental rate should be as though the business was never transitioned. So the rental rate ideally should be established in the lease agreement or in the options to extend, and those should be continuing with the new tenant. Lastly, it says that the tenant shall not be released from its obligations under this lease and shall remain liable for any failure of the tenant or its assignees or subtenants to observe each and every covenant of this lease. This, in the commercial real estate world, is what's called continued or ongoing liability. To give you another example of a doctor that we were helping, just to kind of explain the implications of this language, we were helping a doctor who practiced their whole career out of Detroit, Michigan. They were there for many, many years, and they found a young doctor who wanted to buy their space, and they actually sold their practice to them, sold their home, and actually bought a condo in Miami. A couple of years into their retirement, they got a call from their old landlord. The old landlord let them know that the new doctor, the one who purchased it, had not been paying rent for the past 6 months. And the landlord had no idea where they were. They were no longer there. The lights were off. And at that point, the landlord let this retired doctor know that they were obligated to pay him this outstanding 6 months of rent. And not only that, but the landlord also let him know that he was obligated to pay him the remainder of the lease agreement, which at that point was about 7 years. So this guy calls us, this doctor calls us, and explains the situation, asks us how we can help him, and we took a look at the lease agreement. The problem is, once you've agreed to this, what's called ongoing liability, once you've agreed to remain on the hook, essentially, even after you've transitioned the lease agreement, there's nothing that can be done to relieve that obligation. So what we were able to do is we actually reached out to one of our corporate partners, Henry Schein, and Henry Schein was able to identify another doctor to take over the space, but it took about 4 months or so to find someone else to take over. And unfortunately, this doctor ended up paying for, call it 11 months of rent for a space he had nothing to do with anymore. So it's critically important that upon sale or transition of your lease agreement, that the liability shall transfer entirely. And interestingly enough, last year we had 27 clients that hired us exclusively to revise and amend their assignment clause. They did not care at all about any other clause in their lease agreement. They strictly wanted this revised, and as you understand now, the implications are very severe. There are a lot of other important parts of the dental office leases, and in the interest of time, I'm not going to be going through all of them, but there is one on this slide that I wanted to highlight, and that's called relocation. You'll see it third on the left. And relocation is really a catastrophic event for any dentist. Relocation is the landlord's ability to obligate you to relocate your practice to another space in the building or plaza. And on occasion, the lease will say that the landlord will pay for the movement from their current location to the next location. But really, what does that mean? From our experience, it's ambiguous because movement is an ambiguous term. And what landlords have argued is that what they'll do is they will physically move all of your equipment to the new space, from where you are to the new space. So that does not include any of the dental build-out, does not include the plumbing, does not include the electrical, does not include the dividing walls, nothing at all. So that's hundreds of thousands of dollars of liability for you. And again, this is one of those clauses that's a deal breaker if you're trying to sell your practice. I mean, imagine if you're looking to buy a practice for hundreds of thousands of dollars, and if there was a risk that within 30 or 60 or 90 days notice that the landlord could obligate you to relocate to another space in the building, I mean, number one, it would cost a fortune. Number two, your practice would be closed for 4 or more months building out the space. And number three, the space could be in a much less desirable location in the building or plaza. You know, you could have a storefront location with lots of visibility, foot traffic, and they might want to move you to a high floor or an area next to the dumpster in the back. So not something that we encourage you to remain in the lease agreement. The biggest issue that dentists have related to their lease agreement is that they wait too long before addressing them. And if there's any slide in the lease agreement that I want you to recall after this presentation, it's this one. Because really this has the most impact over whether or not the negotiation is going to be successful. It takes on average about 6 months for a dentist to move their practice, and most landlords know this. And there's nothing stopping the landlord from presenting you with two options at approaching the end of your term. And that's number one, a drastic, call it 40% rent increase, or a 30-day termination notice. Because they know that your ability to relocate your practice is, number one, very costly, and the likelihood that you're going to do that is slim. However, if we start the practice early enough, within 24 or 12 months remaining, landlords are aware, even though it's not verbalized, the landlords are aware that you have the ability to look elsewhere and relocate your practice. And given the type of tenant that you are and that you pay your rent typically on time every month in full, landlords do not want to lose you as a tenant. So if they understand that, even though whether or not it's the case as to you feel comfortable relocating, if they think that you have that option, they're more willing to come to the table and negotiate on some of the terms. So again, really one of the most important things that you can take away today is approach the negotiation 24 months, roughly 24 months before the lease expiry, really because landlords are experts at pushing off the negotiations, whether they say they're going on vacation or they have other tenants who are expiring more imminently than you, or if they say that they're just busy. Before you know it, there's only a few months left on your term, and at that point, if you ever do reach that point, the landlord's won because your leverage is really severely diminished. And that's not to say that all hope is lost, but again, we always like to maximize the leverage whenever possible. We at Cirrus have a 7-step process that we like to follow whenever approaching a lease negotiation. First, Firstly, we gather all of the documentation. So this would include the lease agreement and any ancillary documentation like addendums, riders, extensions, estoppel agreements, all of the above, to make sure that we have all of the relevant documentation. At which point we conduct our due diligence process, which includes a thorough review of all of the documents. And what we do is we go through all of the documents and we highlight all of the risks involved, and we create a hierarchy. So we cover things like the assignment, the relocation, personal guarantee, and we prioritize things that we must have in terms of revisions to the legal language. And in addition to the highlighting of the risks, we conduct very granular market research, including pulling vacancy rates, rental rates, which helps us address the financial aspect of the negotiation. And once you have access to this information, it's much easier to approach the landlord. And rather than simply saying, I feel as though I'm paying too much rent, if we're able to show that your neighbor is paying X and a dentist down the street is paying Y, and there's a vacancy next door being offered for Z, then it makes that conversation much easier to have. Then what we do is we develop a custom strategy based on the specific needs and life plans of our clients, because really no two dentists are alike. Some of them are just starting out their practice, some are looking to bring on associates, some are looking to transition, some are looking to expand. Every situation is different, every locality is different, so it's important that the negotiation strategy is custom tailored for the particular situation. At this point, after we've done our due diligence and developed our strategy, we contact the landlord and begin negotiating the financial terms of the lease agreement. And the reason why we start with the financial terms is because this is what matters most to the landlords. Really, the one thing that ties all landlords together, whether or not they're mom and pop landlords or whether or not they're large institutional real estate investment trusts, is money. And typically this process takes between 8 to 12 weeks of negotiation. Because again, there's a lot of back and forth to finalize and agree upon those numbers. And again, this part of the negotiation, it's very non-confrontational, it's very cordial. It's simply a matter of agreeing on what are fair market comparables, which again, if you have access to fair market comparables and market research, which we do, it makes that conversation much easier to have. And once the financial terms are agreed upon, we spend considerable time negotiating the legal terms, a lot of which we covered previously in this presentation. And finally, after the legal and financial terms are solidified, we review the lease once again. And the reason why we review the lease agreement after all is said and done is because, doing this for 20, 21 years, we've gone to the stage more than once when the final document that's sent over is just the original lease agreement that was sent without any of the negotiated changes. So it's the very first lease agreement after dozens, if not hundreds of hours of back and forth negotiation. And what's interesting is landlords love to blame this on their administrative staff, saying it was a mistake, they sent the wrong file. But once the lease is signed by both parties, we need to make sure that the lease agreement that we spent hours and hours negotiating is agreed upon. And once that's finalized, we digitize the lease agreement and keep it on file so that we're able to help support you on an ongoing basis. We track all of the critical dates of your lease agreement, including expiration dates or deadlines to issue an extension. And we always let our clients know months, if not years in advance, so that you never miss any of these critical dates. So the key takeaways of tonight's presentation are that the details in your lease can cost you hundreds of thousands of dollars if left unchanged. It's not only about the rent. Obviously, the rent is very important, but as you can see, if you focus too much on the rent, then other legal provisions can end up costing you far greater than the additional 10 cents or 25 cents per square foot that you might be paying over the lifespan of your lease agreement. Really, the core of what we seek to do is about minimization of the risk while maximizing your flexibility and practice value, which will inevitably allow you to practice there long-term and give you peace of mind. I mean, you have lots to deal with. You have, I'm sure you have family obligations. You have patients to worry about. There's simply no reason why you should have to concern yourself with real estate matters. Ideally, what we like to do is to sign a long-term lease agreement, a 10-year term, plus multiple 5-year options, call it 2 or 3 5-year options. And if that is negotiated effectively, then really you should not have to worry about the lease agreement for 20 to 25 years. And that way you can focus on your practice rather than having to worry about the lease agreement. It's important to be strategic. You don't get what you deserve, you get what you negotiate into your lease. And once you're equipped with this knowledge, we found that the success rate is drastically higher. It's important to start the process early, as I mentioned. 24 months is ideal, 12 months is also all right, but the further out that we begin the process, the better. And lastly, it's important to do your homework, do your research, get the information that you need, such as the market data, go through your lease agreement and identify some of the major issues so that we can prioritize and address those when it comes to the negotiation. It's critically important that you have a plan before ever initiating contact with the landlord.